Good morning. It's Jeffrey Christian, CPM Group, coming to you from New York. A little bit slightly different issue. We have some technical problems, so I won't be on the screen. Welcome to the Silver Yearbook 2021. It's good to launch it, and the technical problems are already starting. As always, we want to start by thanking our sponsors. We have many sponsors this year. Gatos Silver, Minera, Adularia, and Sunshine Silver, all from the Electrum group of companies run by Tom Kaplan. Tom has actually written unsolicited a forward for this year's report, which I think is very good and very informative. We'll take a slightly different approach this year in the presentation as we have in the report itself, and I'll discuss that as we go along. We also have long-standing sponsors like Endeavour Silver, Metallic Minerals, Pan American Silver, Silvercorp. In the mining sector, we have people like Sabin Metal as a major recycler of precious metals, mostly known for its precious metal, platinum group metals, but still very much active in gold and silver. Monex Precious Metals, Korelin Economic Report, Kitco. Monex and Kitco are major providers of precious metals to investors. The Institute of Scrap Recycling Industry, which we've worked with since the 1980s, and representing the U.S. Scrap recycling industry, including the precious metals groups. I think I've pretty much covered everybody else there now. And then we have our Chinese partner, Shanghai Huatong Silver Exchange, which is the physical silver and PGM market in Shanghai and in China, as opposed to the futures or options market. And Shanghai Huatong has been our partner for, I guess, since about 2014, 2015, if my memory serves me well. They translate our Silver Yearbook into Chinese and distribute it. Up until last year, we had a large silver festival every year in China. It was a movable feast, moving from city to city, that Huatong Silver Exchange, Shanghai Huatong Silver Exchange would put together. This year we've added to our network. We've added media partners, many of whom were already with us. Glacier Publishing, which publishes the Northern Miner and various other mining publications. Bullion Bulletin in India, which is a Fortel company, has worked with us for decades. Investing News Network, Kitco, again, Kitco Metals, as opposed to Kitco Media, it should be, and Metals Daily, and the Prospector News. We also have distributors who work with us to distribute information about this webinar and about the report. Fidelitrade, Fortel, Gold Blocks and Gold Silver Central in Singapore, Introact, NASDAQ, which we work with on distributing the LBMA trading data for London OTC markets, and then the Southeast Asia Consulting, which is Spencer Campbell's company, also in Singapore. So we have companies that work with us to spread the news and spread the information, and we appreciate everybody doing this. The silver market has experienced some very interesting things in 2020, which we'll talk about. And it's experiencing some very interesting things in 2021, which we'll also talk about. And we'll probably be a little bit more forthright about our views about some of the things that have been going on and some of the things that have been being said that are just patently inaccurate about silver. CPM Group has been producing, the research group that is CPM Group has been producing silver research since it was the J. Aaron Research Department in the 1970s. And we're very proud of our long history of getting the market right. The silver price, as you can see, moved sharply higher in July of last year. The price of silver having reached $49.90 some odd cents at the end of April in 2011 declined, and it traded for a year or two really above $28, $27, $28, and between that and $36. And then in early 2013, it fell, and it fell sharply down to about $17, $18. continued its slide from 2013 into 2016, really the end of 2016, the beginning of 2017, but they had spent most of the time from the middle of 2014 until the middle of last year in a range between, really the range was mostly between $14 and $20. There were a couple spikes below 14, a couple spikes above 14, but we've had this long period of relatively mild prices. And as always, I will kick over the presentation to Rohit Savant, who's our senior and director of precious metals research, and also the primary author of the Silver Yearbook each year, along with gold and platinum group metals. And he will talk about the changes in investment demand that really were behind that. 2020 started with the silver price sort of continuing where it was. We had the global lockdown in reaction to the pandemic. Silver prices sold off along with other financial assets and dropped down to about $11 and some odd cents in March and April of last year. They rose back into that range of $16, $18 until July, when they spiked sharply higher, got up to about $28, $29, maybe $30 an ounce, and have been basically trading between about $23 on the low side and $30, $28, $30 on the high side ever since then. We expect the price to continue to move sideways along those levels. We wouldn't be surprised to see prices drop down to test 23. We're not sure that they'll break below that because of the fundamentals that we'll be talking about and the economic environment that I'll talk about shortly. And we wouldn't be surprised to see the price go back up and test $30 or $32 over the next several months. Longer term, into the end of 2021, the fourth quarter of 2021 and into 2022, we think the silver price will start rising again at a relatively modest pace. And then at some point, we think that it will accelerate and probably blow past the record prices around $50 that we saw in 1980 and then again in 2011. So at some point, we think the price of silver will rise and rise sharply. That increase we expect to coincide with the next financial and economic crisis. This is global economic growth. The dotted line divides actual experiences prior to 2021, and the stuff on the right of that is our projections. The red line is global world GDP, and you can see that we had a very sharp recession in 2020. We're seeing a relatively sharp recovery in 2021. Our expectation is that growth rates moderate over the next year or two into 2022, 2021, 2022. And then we wouldn't be surprised to see another recession or close to a recession, another steep decline in global GDP and actually recessionary conditions in the industrial world, the advanced economies, 2023, 2025, somewhere in that time frame. And as we always say, it's impossible to econometrically project the timing of the next recession, the depth and breadth of the next recession, but you can look at the global economic environment and the fragility of the financial system and the breakdown in international cooperation and the massive increase in sovereign debt as well as private sector debt and a variety of other issues. You can look at all of that and you can say, okay, we're probably going to have another recession soon. 100% probability that we will have many recessions in the future. The question is when, how long will they last, and how deep will they be? We think that the world is not really recovering either from the 2020 recession or even the 2007-2009 recession, that these problems that have led to those two recessions have not been resolved and in fact have gotten worse in some ways, so that we expect a major financial crisis, probably starting in some obscure corner of the debt markets, as those two did. That would lead to a recession in the industrialized world and virtually zero growth on a global basis, with the developing countries and emerging economies having a bad time too, although doing better. Now, I want to change gears a little bit and talk about some of the things that have been being said that are inaccurate about silver. And one of the things that you've heard on the internet, if you are so unfortunate as to look at the dark corners, the dusty corners of the internet, gold and silver are things, they're of the sort of things that most people don't know a lot about, but everybody thinks they're an expert on. And because they're not regulated as tightly as securities, equities, or bonds, everybody's pretty much free to say whatever they want. You know, if you want to go online and you want to say something like Tesla is grossly overvalued, you have to have a good argument to support that opinion because it's a registered security. If you want to go online and say, I think silver is grossly overvalued or undervalued, there's no constraints for anyone saying that, and you don't have to prove it. You can wave your arms in the air. You can say, look, I've been telling you for 40, 50 years, the world financial system is going to collapse, the dollar is going to collapse. It hasn't happened yet, but it's going to happen, so you should buy silver. And there's no regulation that says you don't have the right to do that. One of the things that's been said is that the average grade of silver mined by primary silver mines has plunged over the last decade, and that is an indication that the world is running out of silver. And you can see from this table, it has in fact plunged. The average grade at 7 primary silver mines was 13, I guess that's grams, ounces per ton in 2005. And it fell more than 55% between 2005 and 2020 to 5.8. People are saying, well, that's because the world's running out of silver. It's like, no, it's not. It's because the price of silver has gone from $7.26 to $20.67 in that same time period. And there are two things that help that. One is technological changes, which allow miners to more cost effectively mine and recover silver from ore with lower grades that they couldn't economically mine in the past. And the other thing is the higher price. And you'll see this across metals markets. Time and time again, a higher price saves mining companies from bad management decisions. And not that all mining companies have bad management decisions, but in some industries, they stand out more than others. In silver, you have some pretty well-run mining companies that have low costs. But the average silver price, again, has risen 185% from 2005 to 2020. And that has allowed mining companies to mine lower average grade. So you've seen the value per metric ton of ore mined go from $94 to $119. That's 27%, even though they're mining ore that has less than half as much silver in it as they were mining 15, 16 years earlier. So the ore grade decline has to do with the price of silver and technology. It has nothing to do with the world running out of silver. Now, the idea that the world's running out of silver is not new. In the early 1970s, there were various futurists who said we would run out of silver by the mid-1980s, copper by the early 1980s, oil by 1980, gold by 1980, and they were looking at reserves as opposed to resources. Resources are harder to measure. You can look at this table. This table's in the report. It's kind of crowded, and hopefully you'll buy the report and you can study this and you can read the text that associates with it. But just to grab a couple numbers, because in some years they were not reporting reserves. In other years, they were not reporting reserve base at the Bureau of Mines, which became part of the U.S. Geological Survey in the 1990s. So if you look at reserves, in 1988, the world had an estimated 7.8 billion ounces of reserves. And just to go back to 1981, where we don't have that reserve number, we had 8 billion ounces in reserve base. And there's a very famous fellow who was writing about silver in the early 1980s, saying 8 billion ounces, we're going to run out of silver by the mid-1980s. 80s, and the price is going to go to $100 an ounce. Sounds a little familiar. It wasn't true in 1981, and it's still not true. Going back to reserves, 7.8 billion ounces in 1988. By 2020, we have 16 billion ounces. We have twice as many reserves as we did back then, right? Now, if you go over to the right side, you can look at cumulative production, and you can look at 1988 to 2020. We have mined 19 billion ounces in that period. We mined 19 billion ounces of silver in a period that began with 7.8 billion ounces of known reserves. So more than double the reserves that we had at the start of that period. And at the end of that period, we have twice as many reserves as we did at the beginning. And part of that is technology, part of that is explanation, part of it is globalization and industrialization, and part of it is the price of silver. So we're not running out of silver. Now, this all is discussed in the Silver book. And I wanted to tell you, the Silver Yearbook is $160, less than 6 ounces of silver. You get it as an ebook. You go to our website or someplace else that's selling it, and you can download it for $160. So for the price of 6 ounces of silver, you can get a 222-page book that has this kind of detailed data, statistics, and analysis that lays bare the lies that you keep hearing about the world running out of silver, and there's not enough bullion, and there's not enough reserves, and this and that and the other thing. And I put up here 3 comments that we've derived from our weekly videos that we're now posting on YouTube of people who say, look, yeah, these guys, I've made a very good living by understanding that silver is a market that goes up and down. And when the price goes from $30 to $50, it's really a good time to take your profits or keep your silver, but buy some puts at $50 with the expectation that the price is going back to 30 or actually all the way back to 11 if you'd have long enough patience. And you can buy and sell silver like any other asset, and you can do a lot better than if you're sitting there waiting for Jerome Smith to be right in 1981 and say that the price of silver hits $100. And if you go back to that geology and you look at these and you understand that for the price to get to $100, you have to break all of this economics. Look at what happened to the reserves. Look at what happened to the profitability and the increase in production when the price went from $5 to $20. Think about how much silver reserves would rise if the price went to $50 and stayed there, or $75 or $100. I will tell you this, no one who tells you that the price of silver is going to $100 has ever made those calculations. All right, another thing that we've added this year in the silver report is we've reviewed silver bullion inventories. Now, these are inventories of silver bullion bars. And the big yellow is implied, estimated, unreported inventories. There's a lot of silver out there that is secretive. And it's very funny because I mentioned that the silver market is secretive in one of our videos a couple days ago. And my lawyer said I'm not supposed to call people douche because YouTube might block the video. But somebody said, oh, secretive because it's manipulated. No, it's secretive because it's silver. It's silver and gold, and investors own silver and gold around the world across history because they don't want people to know what their full wealth is. Silver is secretive. So you see these guys at these gold conferences and they say, well, I think that the banks and large institutional investors ought to disclose how much gold they actually hold. And you say, okay, well, let's start in this room. How much gold do you have? I'm not going to tell anybody. Okay. It's a secretive market because people want those secrets. Makes my job very interesting because all of a sudden we become detectives and investigative reporters as well as analysts. But there's always been an enormous amount of unreported silver. Our estimate is that in 1970, when I was in high school, there was about 5 billion ounces of silver in bullion form, and all but 500 million of it, so 90%, were in unreported inventories. That declined starting in the 1990s. And we saw in 2005, 2006, with the advent of ETFs, some people selling their unreported bars and buying ETFs because it was seen as a better, easier way to store your silver and to be able to buy more and sell it much more easily than if you have a 1,000-ounce bar or even a 100-ounce bar in a safe or a safety deposit box or a vault someplace. So we saw a big decline in silver inventories, and silver inventories are in fact off about 1.5 billion ounces from 1970, but they're still almost 3.4 or 3.5 billion ounces of silver in bullion form. Now, one of the things that happened that caused that decline in the 1990s was the advent of silver coins. There's probably about 2 billion ounces of silver coins that are not included in these bullion bar inventory estimates. So you've got 3.5 here, you got another 2 billion in coin form, bullion coin form. That's 5.5 billion ounces of silver. And that actually helps explain a number of the other numbers. We have gone through this whole issue of how much silver is out there. And we have been doing this forever, and we do it every year. We're very scholarly in studying this over and over again. But over the last several years, we have revisited this basic data and studied it very hard. I'll show you a slide about that in a second. But first, let me show you a slide here. In July 2016, the London Bullion banking system agreed with the depositories that service them by storing silver and gold, platinum, and palladium there, to start reporting gold and silver inventories. Prior to that, it was pretty much a secret. And there were estimates that went from 200 million ounces to 2 billion ounces in the market as to how much silver was there. July 2016, they came out with their figures. It was 950 billion ounces. It got up to about 1,175 million ounces in early 2020, and then there was a massive decline. Kind of moved sideways in the last half of last year, and then it spiked back up in March, partly because the price spiked up, partly because there was strong demand for silver to be delivered into those depositories for the ETFs. Now, yesterday, the London Bullion Market Association, which collects and distributes this information for the London banking system and the depositories, said, okay, we actually made a mistake. In March 9th, we said that in April 9th, we said that at the end of March, there was 1,259,310 ounces of silver in our depositories in the London banking system. And we were wrong. It was 1,143,194 ounces. The difference was 116,116 ounces. It's very embarrassing that this would happen for the depositories. Somebody's pretty sloppy, and I'm not quite sure who. I know which depositories we like to use for our clients. I know which depositories we don't like to use. But it's very sloppy that you had 116,000 ounces that were misreported or underestimated at the end of March. The unwashed are making a big deal out of this. And it is an embarrassment, and it is a system that obviously needs improvement. You don't see these kinds of errors in well-run depositories. The London Bullion Market Association hasn't really fully disclosed this, but that it is what it is. The bottom line is you have 1.25 billion ounces of silver in London, and a significant portion of that is allocated to ETFs and is in fact allocated to ETFs. And a significant portion of it, perhaps as much as 500 million ounces, is not allocated to ETFs. Some of it's allocated to other investors and types, but it is there. And so again, the meme that the world is running out of silver and London is having silver problems is probably gruesomely overblown by people who are trying to scare small investors into buying silver from them at high premiums, or their agents, people who are paid to write reports for those companies to do that. Now, the LBMA did come out with a statement that during the rush to take delivery of silver in late February, if I recall, it was late January, late February, that the market system was strained. It was the end of January. The market system was strained, and it could have caused problems. And they probably chose their words poorly because what you had was a logistics issue, not a total supply issue. But again, people who are trying to scare small investors will make a big deal out of that. This is that other slide that goes back to the unreported inventories. This is what the US Treasury had. They had 3.4 billion ounces of silver at the end of 1942. From 1890, with the Silver Purchase Act of 1890, up until the 1940s, the US government paid a premium, which sometimes was extremely high, like 500% or 800% of the market price. There were times when the silver price in the market was 14 cents an ounce, and the US Treasury was paying 80 cents an ounce to buy it. So they would buy US mine production, and they would buy metal that was smuggled into the United States and put forth as being US mine production. And one of the mistakes I think that we have made in our data in the past is we thought that by 1942, most of the silver bullion was held by the United States government. It wasn't. There were billions of ounces held by other governments, and there were also probably more than 1 billion ounces of silver held by private individuals. And we found these numbers as we were doing our work for this year's Silver Yearbook. We found these numbers in work that we had done in 2011 and 2001, 2003, and 1981, 1982, when we would go back and scrub these figures. So we talk about all of this in this year's silver report. We go through these numbers. We talk about why the world's not running out of silver, mineable silver. We talk about what the inventories are that are in the market. And we also give a brief history of silver market research. I'm really proud and glad to see one silver mining executive now stepping up and saying, you know what? The numbers that are put out by people who market silver and the people they hire to put together their reports are really bad. They have all kinds of stuff in them that they ought not to be there. They count forwards by producers as a source of spot silver supply, physical silver supply. They throw investment demand dummy variables in many cases into their supply demand figures, and it's really hard to say. CPM Group started off as the commodities research department at J. Aron, which went to the independent bullion trading department, one of the 12 largest bullion trading companies in the world. I took over the research operation in 1980 when I went to J. Aron, having been a reporter. And we started to talk about all of this in the Silver Book. We talk about what was going on in terms of silver coins in the United States, in silver coins in China. You see this big decline in the Treasury. That was the Lend-Lease Act. During World War II, the US government lent about 1.8 billion ounces, if I remember correctly, to other governments to shore up their economies of allied governments during the war. We thought that a lot of that came back to the mint. We were wrong. Most of it stayed overseas in those bank vaults, and it showed up in sales between 1950 and say 1980 or so. We have a table of that in the report. We've been doing this stuff forever. J. Aaron started its research department in the late 60s, started publishing annual silver reports. This is the 1983 Silver Review and Outlook that we published at J. Aaron. I also put 2 Hand Harmon reports. Hand Harmon was a large refinery and fabricator of silver products, and it put out these very small booklets going back to the beginning of the 20th century. And Hand Harmon and CPM Group were the two, or J. Aaron were the 2 companies that produced silver data. And we swapped notes, etc. After we left, well, J. Aaron was bought by Goldman Sachs in 81. In 1986, we spun off the Commodities Research Group and set up CPM Group as an independent research company. And once we were outside of Goldman, 1986, we left, and Hand Harmon saw that we weren't going to collapse and go away. They stopped publication of their silver market reports in 1993 and gave us their files. And that's sort of the history of it. I'm going to hand it over now to Rohit and let him talk more about the fundamentals, if I can figure out how to do that on this computer. And let's see. That should give it over to Rohit.
Thanks, Jeff. We'll start here by talking about silver investment demand. What you're looking at on the screen is a net silver investment demand, which rose pretty strongly last year. It got up to 80 million ounces and broke a downward trend in silver investment demand that had been in place since 2013. That 80 million ounces in net purchases last year was about double of what it was in 2019. And there were a lot of factors that came together during 2020 that helped to drive silver investment demand up sharply. So one of the most important ones, or the most influential ones, was this massive amount of liquidity that was pumped into the market via monetary and fiscal policies, which were put in place to counter the pandemic. But in addition to that, you also had a lot of investors who rushed into the silver market when prices declined sharply. It fell to multi-year lows in March and April of last year. That, coupled with the fact that silver had been underperforming gold for several years, brought in a lot of investors who were looking for a value investment, and silver at that point was providing that value. You also had a lot of investors who bought into silver based on expectations of stronger fabrication demand. You saw a uptick in manufacturing activity, a pretty strong uptick in manufacturing activity during the second half of 2020. You had these expectations, and you still have them, of increased demand for silver from green technologies. And the strong push that you're seeing around the globe to promote the use of these technologies and the positive impact that it would have on silver fabrication demand. So you had a lot of investors buying into silver last year. And while you did have a lot of fresh investors coming in, you also had several investors getting out of the market in the second half, especially when prices broke out of that long held range of between $14 to $20. So investors who had bought silver in the past bull market and were holding on to that metal for a better part of the last decade was seen liquidating some of their holdings. This year, we expect silver investment demand to continue rising. We expect a strong increase in silver investment demand. And we're projecting about 120 million ounces in net purchases during the current year. Now, there are a lot of factors from last year which are still in effect, and we believe will continue to provide support to silver investment demands. All of the factors I just mentioned, which helped to push it up last year. We believe that will continue to influence silver investment demand this year as well. And now, more recently, you have this increased concern about inflation, which we think will also be a factor that would provide support to silver investment demand. CPM Group's view is that we do think that inflation will rise over the next several quarters, but we do not see it as a problematic inflation. We don't see hyperinflation, and we don't necessarily see the inflation lasting for an extended period of time. There are certain supply-demand issues that are happening right now in various pockets of the market, which we think will smooth out over time. But nonetheless, we also do believe that inflation will go up, but not in any kind of problematic fashion. But the fact that there's an expectation that inflation will go up strongly should be something that will provide support and force to this increase in silver investment demand that we're seeing this year, or expecting to see this year. So what you're looking at in this chart is silver's price performance relative to gold during gold bull markets. And as you can see in the chart, silver has typically outperformed gold in pretty much every gold bull market in history. Our expectation is for gold prices to continue rising over the medium to long term. As Jeff mentioned earlier, our long-term expectation is that we do see both the metal prices going higher. So based on our expectations of what we expect for gold and what we've seen silver do in past gold bull markets, we think that silver still has a fair bit of upside potential. That said, a lot of the low-hanging fruit's been taken. So if you look at the chart on the left-hand side, that shows you gold and silver returns on an annual basis over the past few years. And up until 2019, in most years, silver was underperforming gold. That changed in 2020. Silver shot up pretty strongly. And even in the first 4 months of this year, silver prices are still doing better relative to gold. That said, the gold market hit a fresh record high last year. Silver is still well below its record high levels. That, coupled with our expectations of healthy investment demand as well as fabrication demand going forward, we think positions silver well to at least get back to its past record high levels. So there still is a substantial amount of upside potential from where we are right now. What you're looking at here is global silver coin demand, and this rose fairly strongly last year. You had about 115 million ounces in silver coin demand during the year. Much of it happened during the March-April period when prices came down sharply. And this year we expect that silver demand from this product will probably reach about 135 million ounces. It could potentially go higher than that, but that's our expectation, about 135 million ounces, which puts it at levels similar to what we saw in the last bull market for silver. This is a chart that shows US Mint Silver Eagle coin sales. And as you can see, in 2020, you had sales for these coins rise in line with what you saw around the world. And this year as well, in the first 4 months, you've seen pretty strong demand for these coins already. In the first 4 months, the total sales are about half of what they were for the full year in 2020. So that gives us an indication of the strength in demand for these products at this time. This slide shows you the premium that is being paid by dealers for various silver products, and it shot up strongly early last year. That was a combination of logistical issues on the supply side and also an uptick in demand. over the course of 2020, you saw those premiums come down for all of these products as the logistical issues kind of smoothened out a little bit, and demand also came a little bit under control when the price started to go up. But again, this year, you've started to see premium rise again and rise sharply in the case of some products. That has some to do with the limited production at the mint, but this year it's more a reflection of that stronger silver investment demand that we are expecting and seeing. This chart shows us ETF holdings, which rose to record high levels in 2020. There was also a record increase in the amount of silver that was taken in by these products. On a net basis, there were about 333 million ounces roughly that were added to these products in 2020. And like in the case of gold ETFs, not all of this 333 million ounces was from investors. Some of it was from gold bullion banks who were selling the bullion in their holdings and replacing it with silver ETFs. Nonetheless, there was a very strong demand for silver from these products during 2020. And we've continued to see that strong demand in this year as well. So through the end of April of this year, you already have about 73 million ounces of net additions to silver ETFs, which again, this coupled with what we've seen with some of the coin sales figures suggests and shows that there is strong demand for silver from investors this year. And that forms some of the basis for our expectations for that 119 million ounces in net purchases for silver during 2021. So with that, we can move on to fabrication demand. Fabrication demand declined last year, which wasn't entirely surprising. It slipped to about 875 million ounces, which was down 5.6%. This decline was less than what we had initially anticipated. And a lot of that had to do with a sharp rebound in manufacturing activity during the second half of 2020. So you saw that sharp increase in manufacturing activity, which was to a large extent driven by increased demand from consumers for goods. And that increase in demand was being driven by a massive amount of fiscal and monetary stimulus that was being provided across various countries, and also a diversion of budget, the dollars within your budget away from services and towards goods. So that boded well for manufacturing activity, and in turn was helpful to silver fabrication demand. This year we expect a increase in silver fabrication demand, but we don't necessarily see an extremely strong increase in silver fabrication demand. So we have silver fabrication demand rising this year to about 885 million ounces, and there are multiple reasons why we don't see a sharp increase. So for one, you have declining silver demand in the photography sector, which is not new. It's something that's been in place for about 20 years. But you also have a decline in silver demand from the ethylene oxide catalyst sector. And I'll talk a little bit more about that further down in the presentation. You have an increase in silver jewelry demand as well as demand for silver from the electronic sector, but we don't expect strong increases in either of those sectors. So in the case of jewelry, what you're seeing is the high price of silver we think will continue to act as a headwind to demand. And additionally, you have, or we expect, weakness in silver demand from the jewelry sector in India, with the sharp increase in COVID cases and the problems that the country is facing at this point. It's highly unlikely that you're going to see a sharp increase in silver jewelry demand at a time like that. On the electronics front, there is strong demand for electronics on the consumer end. But we think that, and again, I'll talk a little bit about this later, but with regards to electronics, we do see growth, but we see it as below potential growth. So it could have grown a lot stronger, but we don't necessarily see it growing that strongly, in large part because of the problems that you're seeing in terms of manufacturing capacity and the problems on the semiconductor production. One sector we do think which will grow strongly and in a healthy fashion this year is the solar industry. But the increase that we expect there is not going to be sufficient to offset the softness in demand in some of the other sectors that we just talked about. So let's talk here about the electronics sector. Last year, you had silver electronics demand stand at about 225 million ounces, which was down around 2.5% from 2019 levels. This decline was probably the smallest decline among the various sectors across the silver market. And that had to do with the fact that there was a pretty strong uptick in demand for electronics in the second half, and in fact from the second half of the second quarter onwards. You had a sharp increase in demand for consumer electronics like laptops and tablets. Once the stay-at-home orders were put in place, the demand for these products increased substantially. That was offset to a large extent by weak demand during the first quarter and weak demand for products like smartphones, PCs, desktop PCs, which typically carry a lot more silver than a laptop would, and also reduced business expenditure during the year. So you had these factors offsetting some of that increased demand for things like laptops and tablets. In 2021, we expect silver demand from the electronic sector to rise to about 229 million ounces, which would be a 2.2% increase. On the consumer demand side, we see consumer demand being strong and healthy. You have a lot of pent-up savings. You have an economic rebound in various countries. But at the same time, you have issues on manufacturing of semiconductors because of a variety of different reasons. And we think that that would act as a headwind to the amount of silver that is going to be consumed from this sector during 2021. The auto sector is another sector. This data is included as a part of the electronics, but we've just segregated it here because of its growing importance. The amount of silver going into cars has been increasing, and we expect that the amount of silver going into vehicles will continue to rise. However, last year we did see a decline in the amount of silver being absorbed by the auto sector, and that had primarily to do with decline or weakness in the vehicle market. So on a global basis, you had vehicle sales go down about 13% in 2020, which we believe weighed on demand for silver from this sector. And this year as well, while we do expect demand to rebound from the lows that we saw last year, we don't necessarily see a very strong increase, and that's primarily got to do with the shuttering of a lot of auto plants because of that shortfall of semiconductors that I was mentioning before. Demand for silver from the solar panel industry stood at about 93.8 million ounces last year. There are two factors that primarily influence the use of silver in this sector. The first is the amount of solar panels being produced, and the second is the level of thrifting that is being carried out in the industry. So while you had a very strong decline in silver manufacturing, solar panel manufacturing during the first quarter of last year, over the second through the fourth quarter, you did see a pretty strong rebound, and it did compensate for the losses during the first quarter, basically bringing total solar panel production back to levels that were seen in 2019. Nonetheless, you do have ongoing thrifting of silver from these solar panels, which weighed on the amount of silver that went into the sector. And we think that is going to be something that's an ongoing headwind for silver demand from this sector. In 2021, we expect silver fabrication demand from this source to rise to about 98 million ounces. We expect strong demand for solar panels in the US, Europe, potentially India. They have a lot of big plans, but those might get put to the side for a bit while the country moves through with its current COVID issue. And we do expect some softness in demand from China as subsidies start getting removed, and also because they have built out a substantial amount of capacity over the past several years, even compared to other large energy markets. The ethylene oxide catalyst sector was probably the only one, was in fact the only sector within the various uses of silver that showed a strong increase in demand during 2020, and that had to do with the bringing on of a lot of new capacity for these catalysts during the year. This year, that new capacity is expected to go down. It's been rising strongly over the past 2 years, and there's an expectation that that new capacity will decline this year, which will automatically bring down silver demand from this source in the current year. So that we'll talk about supply. Total supply, which is primarily composed of mine production as well as secondary supply, stood at 954 million ounces in 2020, which was down from 966 million ounces in 2019. The weakness that we saw in 2020 was driven entirely by weakness on the mine supply side. The COVID lockdowns in some of the large silver producing countries like Mexico and Peru played an important role in shrinking mine production during the year. But even outside of the COVID related shutdowns, the silver mining industry has been facing certain headwinds. And even if there weren't any COVID related shutdowns, our expectation was for mine supply to decline during 2020. It just would not decline as sharply as it did. So some of those issues are for a long period of time, for an extended period of time, silver prices have been extremely weak. You haven't seen a lot of new mine capacity come on stream, and you've seen some pretty large silver mines that have been shut down for various reasons, all of which have been weighing on silver mine production. One factor that did help to offset some of that weakness in mine production was the scrap supply, which rose during 2020. It didn't rise as strongly as one would have expected in a year like 2020, and there were a couple of reasons for that. One was the disruption to scrap supply chains in the first half of the year, and also what is typically seen during recessions in the past is consumers selling their old jewelry or selling their gold and silver in times of deep recessions like we saw last year to raise cash. But the large amount of stimulus provided by monetary authorities as well as governments last year and the speed at which they provided it basically reduced the need among consumers to be selling their silver the way they did, say, in the Great Recession or in most major recessions in the past. So both these factors together weighed to some extent on the amount that scrap supply rose, and therefore it wasn't sufficient to offset the weakness that we saw on the mine production side. This year, we do expect total silver supply to rise. We expect that total silver supply would rise over 1 billion ounces back to over 1 billion ounces. And that has primarily to do with the normalization of mine production, as well as an increase in silver supply from certain primary silver mines. New capacity additions, this has been in a declining trend since 2013 really, and we expect this to continue through 2021. Last year, with the increase in silver prices, we have seen an increase in expenditure towards exploration, but it would take several years before we can actually see a positive impact of the increased spending on actual mine supply. So we expect that at least for the next few years, the weak trend that we've been seeing will remain in place, which will keep mine supply vulnerable to the downside. Cash costs on a production weighted basis stood at $6.48 an ounce, which was about roughly 8% lower than what it was in 2019. There were a number of factors that helped to bring cash costs down during 2020. One was a strong US dollar, especially against the Mexican peso and the Peruvian sol. You also had a substantial byproduct credit provided to primary silver producers because of the sharp increase that you saw in gold prices as well as in base metal prices. Then you also had a decline in energy prices. So all of these factors collectively helped to bring down cash operating costs in the mining industry, in the silver mining industry last year. A couple of factors did push costs up. One was a general reduction in the production of silver, and because cash costs are measured on a per ounce basis, the reduction in production pushed up that cash cost on a per ounce basis. And you also had increases in treatment and refining charges at various companies, and that really had to do with the way those charges are set up. They were using index values at the end of 2019 or in early 2020, which were not really reflective of market conditions over the course of 2020. So these two factors did put upward pressure on costs, but they were not sufficient to push costs up more than what they were in 2019. On this slide, what you're looking at is the margin between production weighted cash costs and average silver price, and this rose last year primarily because you had silver prices rise on an average basis, you had cost decline on an average basis. The margin rose to the highest level that it was since 2013, but it still is lower than what it was in 2011 and 2012. What is worth pointing out is that while silver prices were much stronger in 2011, 2012 than they were in 2020, the cash costs were a lot lower in 2020 compared to what they were in 2011, 2012. And that's a reflection of mining companies becoming a lot more disciplined on the cost side following the weakness that we saw in prices starting in 2013. So with that, I will pass the presentation back to Jeff to talk about some of the events that CPM Group will be hosting over the next couple of months. And after that, we can open it up to questions.
Thank you, Rohit. And thank you all for sticking around so long. We're now almost into the first hour, but we'll open it up for questions. Before we do that, I did want to, as Rohit said, we have our Platinum Group Metals Yearbook, which we will release on Tuesday, July 13th. We have been publishing the date of July 12th. That's a mistake that we will have to correct. We like to publish these things on Tuesdays for a variety of logistical reasons, and you'll get invitations to that. In addition to that, we are organizing an open forum on silver. And in the past at the Silver Summit, we used to do this thing called Challenge Your Assumptions, and it started off as an hour during lunch, and it ultimately was 1 to 4 hours after the banquet. And we wouldn't have a formal presentation. We just have a room, oftentimes a circle of chairs, and people could ask us questions. And how does the U.S. Mint buy metal and things like that. We're going to do that again. There have been any number of people who have been asking us to address various issues about things that are being said about silver that may or may not be accurate. So we're going to have an open forum on silver. We have given off some interviews to legitimate press. We have been approached by various people who we can only say they're not illegitimate press, they're not the press. They're advocates for conspiracy theories and otherwise not particularly reputable or knowledgeable about the markets. And we have no value, we see no value in granting interviews to those people. But what we do see value to doing is reaching out to investors, and we've talked about conspiracy theories and the people who follow them in the past, and I'll talk about it again. And I will say that we're going to circulate a very interesting interview that I gave in January, which has been made public by somebody on a podcast where we talk about this, and the people who spread conspiracy theories, often this is their job, and you're not going to convince them to close up the carnival and leave town. They will always be there. They've always been there talking about this or that conspiracy theory. And, oh yeah, Drexel was manipulating the silver price. Drexel goes bankrupt. So no. I said Merrill was manipulating the price. Merrill gets out of the silver markets. Oh no, it's JP Morgan. And over 40 years, hey, the silver price is, this cartel is about to explode. The silver market's going to collapse on them, and the price will go to $100 or $200 or $1,000. And it just hasn't happened. And you will never cause those people to stop saying it because this is their job. Then you have another sector, which are what Eric Hoffer called true believers. And they believe this stuff because they believe conspiracy theories. It's the same people who believe all those other conspiracy theories across society and politics and economics. And you're not going to convince them because they are believers. And evidence and facts and reality and even observable empirical things in their own lives will not change their beliefs. It's heresy to change your belief based on knowledge, by definition. But there's an enormous number of people out there who look at the world and they say, hey, this just doesn't look right. Why is all this money coming out? Where is it going? Why isn't the economy stronger if the government's kicking out trillions of dollars in money? Why is the stock market rising consistently and strongly through all sorts of economic crises? And why is it that the silver price doesn't go parabolic and never come down? And they're looking for explanations. They don't necessarily see them. And here are the carnival barkers with their easy monochromatic explanations. Oh, it's a conspiracy. Oh, it's manipulation. It's you can go on and on and on. And those people are the people that we like to talk to. We like to have a dialogue with them. And as I said, at the Silver Summit, these dialogues started off as an hour. And then by the end, they were 3-4 hours. One night we had the Hotel Davenport in Spokane manager come in and say, listen, public transportation closes down in Spokane in an hour. We need to close this up so our employees can go home. So we're going to try to replicate that. And what we've done is we've asked 2 independent people from outside CPM group and outside really the silver market to serve as questioners. One is a fellow who calls himself the Happy Hawaiian. Understandably, he doesn't want to be identified as being associated with certain elements on the internet. So he goes by a nom de plume. I made fun of a guy who was using a nom de plume in 2014. I said, something kind of yuck about a guy who won't give up his own name. So he actually did give up his own name, but I'm not going to push the Happy Hawaiian. I've had several conversations with him, and he is of that third group. He honestly wants to understand what's going on, and he's very smart. We talk about the sins of the intellect. This guy knows things, and he knows how to think critically, and he knows how to say, and he's not a deluded. So when he hears something, he says, wow, that makes a heck of a lot more sense than what the conspiracy theorists are saying. So he's going to ask questions, and he'll have free reign. And then we've asked Corey Fleck, who is the editor of the Korelin Economic Report, and interviews people and writes about a full range of topics, including precious metals. And Corey will not only ask his own questions, but he will also field questions from registrants. Registrants can go to this website that you see here on the screen, and this will be available on YouTube probably later today, this presentation. Registrants can go, they can register. I think we have a capacity for 3,000 people. They can send in questions ahead of time. They can wait, and they can send in questions during the open forum. We put down that we think it'll last 2 hours. That's probably reasonable for something online. I have no problem talking for a day or two. There was a government in South Africa in the 1980s who hired me to come down and talk for a week. Ro and I have gone off to a sovereign wealth fund where we talked for 2 or 3 days about the gold market to them. So we'll try to limit this to maybe 2 hours of questions. But we have independent people who will ask the questions and who obviously will, scrub them, and so the inappropriate questions won't be asked. Or they may be asked and we'll say, no, we're not going to answer that. That's good. So we hope to see you or hear you or be online with you on May 25th, 4 p.m. Eastern Daylight Time. We'll start it. And you go to the registration and register, and we hope to see you then. Let me open it up for questions. And Carlos Sanchez from CPM Group has been looking at the questions, and he will tell us what they are. Carlos?
Hey, Jeff. The first question is, what do you forecast for silver versus gold in terms of the gold-silver ratio in the years ahead?
Rohit, you want to take that or should I?
I could take it and then you can add to it if you want. We don't necessarily make any forecasts on the gold to silver ratio. Right now, that ratio is at about what is the historical average for the ratio going back to the 1970s. We do think that the ratio could decline going forward based on the expectation that you have healthy silver fabrication demand fundamentals, and you have silver still in the process of playing catch up. So while it has recovered a lot from where it was exactly about a year ago, there still is further potential for silver prices to go up. So you could likely see that ratio decline. But yeah, we don't necessarily have a specific forecast on it.
What we do have are forecasts for annual average gold and silver prices going forward. And we take them out at least 10 years. And if you look at those, we think that the gold and silver prices are both going to spike sharply higher at some point over the next 10 years. And if you look at those projections and you divide our projected gold price by our projected silver price, you probably get to a ratio of close to 30 or 35 to 1. I don't have the numbers right in front of me, but it's probably 30 to 35 to 1. So that tells you that it reemphasizes what Rohit said. We do expect the silver market on the upside to outperform gold. And we do think that that ratio will decline on a temporary basis before reversing. The ratio has ranged from 16 to 1 on the day that the Hunts went bust in 1980 to like 120 something to 1 early last year. So it varies sharply. And you don't look at averages, you don't look at ranges. What you do is you look at the fundamentals of gold, the fundamentals of silver, and the macroeconomic environment that drives investors into or out of those markets. And that's sort of where it comes down. Next question.
Okay, next question is, can you provide more detail on Indian jewelry demand from 2019 through 2020 and a forecast for 2021?
So Indian jewelry demand in 2020 was about 35 million ounces. We expect that this would go down a little bit in 2021 based on what you've been seeing in the market, and so we have it at about 33.5 million ounces for 2021.
Next question. Which countries do you see as major manufacturers and purchasers of silver coins?
In terms of manufacturing, it's in the US, Canada, Australia, Austria. You have a lot of manufacturing in China. You have all of these countries manufacturing large amounts of silver coins. Demand is pretty much across the globe. I guess there's a lot of demand for, yeah, I would say it's pretty spread out in terms of on the demand side.
Okay, next question. What role do you see silver playing in the years ahead in the medical field?
So there's a lot of questions being raised about the use of silver in the medical use. There was a report put out recently in Europe which questioned whether it made sense to use silver in some of the new medical uses that have been cropping up over the past few years. So depending on how many countries adopt that thinking, you may not see the strong uptick in demand from the medical sector that was expected a few years back. That said, it has been, it is being used at the moment in a lot of countries, and there has been growth in that sector over the past few years, but in future, it's debatable how strong that growth will be.
Okay, these questions relate to silver use in solar panels. What regions do you see there would be a great deal of growth in solar demand?
I missed the first half of the question.
Where do you see a growth in solar demand? In what regions?
So we do expect strong growth in demand in the US, Europe, India, and we think that China will see a slowing of demand in the years ahead.
Okay, when do you expect an increase in recycling rates from solar panels? And when could that peak demand be for solar panels?
So the expectation is that recycling from solar panels will start to increase in the coming years and is expected to, the recycling part is expected to peak out and then plateau sometime in the second half of this decade. And in terms of demand, you probably still have several years more of strong demand from the solar industry before it peaks out.
Okay. What are our estimates of silver in investor holdings and in government holdings?
In investor holdings, I'm gonna have to go back to the inventory side.
Yeah, we have those numbers in our report. And in terms of government holdings, well, I'm scrounging around for the investor figures. Government holdings, we believe, are very low these days. They've been, you saw the U.S. Treasury stocks and how they were drawn down really in the 70s through 90s, or 50s through 90s. And our expectation, our belief now is that there's very little amount of silver held in government inventories. In terms of investor holdings, I said there are 2 billion ounces of silver in coins. That is all held by investors. So there's 2 billion ounces right there. And then we have another 3.4 billion ounces in bullion form. And most of that also is held by investors. If you look at the amount that's held by the industry, it's relatively smaller than that. There are working inventories throughout the industry, which might total 1 billion ounces, which would leave, 2.5 billion ounces of bullion in the hands of investors. And I think that probably jives with other figures that we have just off the top of my head. But then you also have silver that's held in like jewelry and statues and decorative objects. And the estimate is that that's almost 26 billion ounces of silver that's held in those forms. And you wouldn't call that investment demand, but a lot of it is. I mean, I have a statue that was given to me as honorable gift once when I was speaking in Mumbai. And it's a beautiful statue. I'll never melt it down, but it's 10 ounces of silver. And you clearly have billions of ounces of silver in decorative objects, statues, religious objects, jewelry that has a quasi-investment holding. Okay.
Okay, next question. Do we expect a pullback in the silver price this year? And what is our price forecast for the remainder of 2020? For the remainder of 2021 and 2022?
You want to handle this, Ro, or should I?
You can handle it.
Okay. I mean, I mentioned at the outset that we wouldn't be surprised to see the price drop down back to 23 over the course of the next 5 months. There's some seasonality there, but you also have a rise in optimism about the economy in the United States and on a global basis. You have a still strong stock market. So we wouldn't be surprised to see the price fall as low as 23. But then we also wouldn't be surprised to see the price rise as high as 30 or 32 over that same period of time. And then in the fourth quarter, we're looking for prices to start resuming their increase. But they're resuming their increase from $27 today, not from $32. So we do think that the price will move higher, probably starting later this year. But in the meantime, there is some vulnerability to the downside. But $23 is the new base since July of last year. We don't see it going back to, $15 or $17 as it was for that 5-year stretch prior to 2020.
Okay, next question. What is your assessment of the geopolitical risk in Latin America in terms of mine production?
Carlos, do you want to talk about that, since given that you have hands-on experience right now? Or should I?
Yeah, I can talk a little about it, and then maybe you can fill in a little bit.
Rohit might have, yeah.
Yeah, so there is concern about mine production, I guess more so more recently in Peru, given the presidential elections coming up. So far, with what's happened with COVID over the past year or so, 2020 March, mine production has been mixed up and down, both in Peru and Chile, given to the logistical issues with the virus, but also some political turmoil, some labor turmoil. It has recovered. It did recover for the most part in the second half of 2020, with those restrictions, lockdown restrictions being lifted. But going forward, we would expect this to become, I guess, these to become less of an issue as the vaccine makes its way here in South America at increasing rates. This may not happen in the next several months, as it's happening in developed economies, but later this year.
Rohit, you have anything to add?
Sorry, I lost audio connection. Is this on the question about Latin American?
Yes.
No, I don't have anything to add to that.
Yeah, I think Carlos handled it pretty well. So next question. Carlos, more questions?
Okay, next question. As silver prices rise, is there any evidence that R&D might generate new materials as silver substitutes in industrial uses?
I mean, there's constantly an effort to reduce the use of precious metals in various fabricated products. Increase in prices could potentially accelerate that. There's usually a limit to which that thrifting or reduction can occur, because each precious metal provides a certain very specific quality that may not be found easily or economically in other metal or substitute. But yeah, I mean, that's an ongoing process and factor in across all precious metals.
Okay, next question. What recycling rate should be expected annually going forward, with prices staying in the range of around $30 an ounce?
So we have silver recycling at about 215 million ounces for the current year. It was around 200 to 205 million ounces prior to 2019. It won't be surprising to see silver recycling somewhere in the 210 to 215 million ounce range in coming years.
Okay. At what price do we see the silver price as not being economical for solar panels?
At what price do we see it not being economical? It is a small enough cost, and I don't remember exactly what percentage it is of the solar panel, that unless prices get up pretty substantially, there's unlikely to be a shift away from silver. I mean, if you look at palladium, that's a great example of how long fabricators can endure high prices before they start shifting back or shifting to other metals or the substitutes. And that goes back to what I was saying before, which is each metal tends to have some very specific characteristics that, I mean, of course, price makes, is an important factor here, but silver, for example, is a great conductor of electricity, and you may not get the same level of efficiency from other metals. So even at higher prices, solar panel manufacturers may continue to use and endure that metal.
Okay, thanks. That's the last question that we have. Thank you all for being here and for asking good questions. I will clarify a couple of things. When I was talking about the gold silver ratio, I don't have our 10-year projections in front of us. It may be that we have it falling closer to 40-1 rather than 30-1. But you can buy our long-term gold and silver yearbook projections and play with them yourselves. The second one is there was something of a trick question there. What do we see happening with secondary supply if prices stay around $30? The price of silver averaged $20 last year, and so far year to date, it's probably averaging around $26. So, you know, as Humphrey Bogart's character says to the Nazi colonel in Casablanca, ask me when we get there. We're not at $30 yet. We do think that we will get to $30, but that is an issue that is of key importance, not only to secondary supply, but to mine production, fabrication demand, and investment demand. Where's the price of silver? Right now, it's about $27. So that's about it. We hope to have you all join us for the open forum on silver. It can be very interesting. We put it in the afternoon in the East Coast, so you know we can have wine with it remotely. We hope to see you there. We hope to see you at the Platinum Group Metals Yearbook launch in July. In the meantime, enjoy the spring weather if you're in the Northern Hemisphere, and enjoy the autumnal weather in South Africa and Australia. Thank you and goodbye. We'll talk to you later.